Lyn Alden Investment Strategy founder, Lyn Alden, in person. In person, it's been years. It's so great to see you in person.
Happy to be here. Thanks.
All right, so I wanted to go through this with you, right? Get your thoughts on these particular, big tail risk, and we can lump the geopolitical conflict and inflation together.
Yeah.
How high do you rank these right now?
I think at the current time, the inflation geopolitical one is the biggest one. And not that it's necessarily inflation, but it replaces consumer spending, because we don't have a situation of more money chasing the same amount of goods, but we have energy price increases. If they stay prolonged, the consumer they're spending more there, they're spending less elsewhere. And we already have some stall speed aspects to the economy.
Right.
And so I think that's top of mind currently, number one. Probably the one that I fade the most compared to consensus is the private credit contagion scenario.
And I think we may have another chart to share with this topic, but private credit, 16%. You don't think as much to do about nothing, but we don't really grasp the size of this space.
Yeah, I would separate two things. I think it's private credit can very much be an issue for private credit investors. The bigger question, of course, is can it cascade into the banking system, cause issues? Right now, I mean, the numbers are very containable. The banks have something like 1.9 trillion in total loans outstanding to non-deposit financial institutions. A section of that is private credit. That's a very big number, but that's roughly 7% of bank assets. So even if they were to have some losses on their books from that, they have multiple safeguards. I don't view it as a contagion risk outside of obviously the key areas where people are investing.
Right, because it's been making me real nervous, right? And a lot of folks have said, all right, well, bring someone on with a counter argument. So I'm glad you presented the counter argument. All right, the AI bubble, it's interesting. In February, it was really looks like double where it is now. All of a sudden, the AI bubble pulling back. Obviously, we know valuations have come in a little bit. I mean, yesterday, maybe even today, all the Mag 7 names were negative for the year.
Yeah, it's almost like with AI, investors can't win because if they're worried about the bubble, but then they're also worried about it being so effective that it disrupts all the software stocks and everything.
Right.
And so I think that between the two, there's risk obviously, but there's opportunity. I've been generally more bullish than average on the software companies, for example. I don't think they'll be as disrupted as quickly as some of the bears think. And I don't think, again, that the numbers are large enough to be a major concern around bubbles. I do think that the RAM pricing is going to remain elevated for quite a while. I do think that while those stocks have gone up quickly, it's already kind of priced that in. I don't view that as a bubble.
Well, let me ask then, because this was a bubble and people were really worried about the financing, the incestuous financing that's going on, the numbers, return on investment, how can you get back, 600-700 billion. Just yesterday, we learned that just two chips alone, or chip systems, right, are going to be $1 trillion. So that seems like it would maybe fan even more AI bubble anxiety, at least on the respect with where does the money come from? How do you get a return on this?
Yeah, these things tend to go on longer than people think. I think that primarily, obviously the chip makers are going to be big returners. I'm not very bullish on the middle stack, those that are making AI available. I think they're going to continue to be loss leaders. And then I think actually one of the biggest beneficiaries will be the end users. So whether it's individuals, but also various companies that are going to be able to cut expenses pretty dramatically.
Right.
So it's unlike the 2010s where most of the social media stocks, all those network effects, that concentrated trillions of market cap into the Mag, the Mag 7 and the other big mega caps. I think this is actually, apart from a couple of really big chip makers, it's going to be more diffused out in the economy. All the productivity.
What about dollar debasement? Are you surprised it's only 1%?
I think so. I mean, I think right now, obviously, when you have a flight to safety, it tends to be into the dollar. And then even when it's not a choice, just because there's so much dollar-denominated debt out in the world, cross-border lending, and so when cash flows dry up, either because of memory or either because of energy or elsewhere, there's all this scramble to get dollars to service existing debts.
Right.
And so I think while that is a long-term concern, I don't think anything stops the train in terms of...
Yeah, nothing stops this train. You're famous for that quote. Okay, yesterday I had a guest who liked Adobe, and you think it's a good contrarian idea. It's certainly come down. If you like it, if you liked it at 575, Mrs. Smith, you're gonna love it at 255.
Yeah, I think there's a number of stocks, and Adobe's the primary one that I'm watching, that I do think it's getting overdone at this point. I do think that we're perhaps still early, so I'm a little bit hesitant to call a bottom yet. But I think in the next couple of months, you really want to be watching this space, whether it's Adobe, whether it's Salesforce. because as powerful as AI is, it's not magic.
Right.
It does disrupt some of their pricing. They're already incorporating AI.
Right.
And there's going to be a churn here. But I think that when the dust settles, and again, we might be a little bit early, but I think there's going to be opportunity here. And they have strong balance sheet, which allows them to make the necessary investments and to weather it.
Another name you like, it's not as beaten down as in Adobe, it's CrowdStrike. And this is, everyone loves cybersecurity. And if I use a longer term chart, they make these moves, but then occasionally hit these big bumps in the road. Is this the area here, because it is trying to make a move right now? Is this sort of a place where maybe you start to accumulate it?
This one I think you want to watch to see if the bottom holds. I would place Adobe and Salesforce. It's probably more interesting at the current time.
Okay.
And then keep this one on your radar.
Okay. Now, I want to ask you about this FOMC gathering meeting. Nothing's supposed to happen. Nothing will happen probably in terms of, but there's a lot of internal intrigue, palace intrigue, if you will.
Yeah.
Where do you see this going? I already believe the Fed is political to an extent, but I think it could be more political, particularly if Powell decides to stay after his term as chairman is up.
Yeah, we have a little bit to learn from them in 2022 when we were having a prior energy crisis. Powell was on record saying that they would try to look through potential disruptions in energy, because their primary tools are around affecting the rate of bank lending, the rate of overall money supply growth. That's not the issue here. The issue is a specific issue related to energy. And so I think that for them being very hawkish based on purely on the energy situation wouldn't make sense. And I think they're probably going to adopt similar language this time. But certainly, like everyone else, I'll be watching.
Yeah, we'll all be watching. Everybody will be watching Fox Business, right? Lyn, thanks a lot. Good seeing you.